Hello guys, welcome to another video. In today's video I will be speaking about the best ICT strategy which you can use when it forms. Now when I say the best, it does not actually mean it is the best. This is from my personal opinion, and the reason why I say that is because whenever I use it, they're mostly winners, okay? Now it doesn't form as often as other concepts and other strategies, however it's very powerful. Now I personally use this strategy and I'll be showing a real trade example in today's video. So let's get straight into it. So here we have two little diagrams here, and you can see that of course we have this near high in price and we have this near low in price. Now this is liquidity, right? Now usually what the market will do is go ahead and take these highs and continue to take this low. Now sometimes you may get where price does reverse a little bit. Now that's the exact point you want to be buying over here. So it may come into some sort of fair value gap order block, mitigation block. It doesn't matter as long as it comes into some sort of PD array. Now maybe thinking, well, if you're expecting for this high to go, why are you expecting for price to return? You're not expecting for price to return. I'm saying when it forms like this, if it does reverse, you can then be a buyer. Why? Because these highs are now relatively equal highs, and prices a lot of the time will take it. Same here. Price may not actually take this low. It may have a small reversal, trip out some traders to thinking, okay, it's not going to continue lower, it's going to continue higher, and then you can be short. You could be a seller here for price to actually then go down and take that low, and here for price to take that high. So it's very simple. So when you've got a near high, price is near it, so you can see we're near this high, or near multiple highs. Okay, it doesn't have to be a high, it can be near relatively equal highs, it could be near relatively equal lows. But when you see there's some sort of reversal, go into your lower time frame, and yeah, so I'll be going into the charts and let's get straight into it. Okay, so we are now in the charts on your USD, and I also forgot to mention that make sure when you are trading you are trading inside of a kill zone. So that can be the London kill zone, that could be New York kill zone, that could be the London close kill zone. Okay, just make sure you are trading within a kill zone time. The London kill zone is 2 to 5 a.m. New York local time, so change this to New York time. And the New York kill zone is 7 to 10 a.m. New York local time, and the London close kill zone is 10 a.m. to 12 p.m. New York local time. So yeah, so here you can see that we have your USD. You can see we're not quite in the London kill zone. So if we just put this forward, now we're in the London kill zone. So now you can see overall that past few days we've had bearish order flow in price, and I also do have a higher time frame narrative and bias to this trade. Now this is a real trade, however I do keep that disclosure mentorship to my bias and my overall narrative and why I was actually going short for the day. So this model presented and this confirmed a entry for me. So if you do want to join my mentorship, it is linked below in the description if you do want to join that. But this in and of itself is very powerful. So we can see that price is coming down. We can see that we have this near low. You can see how price is near. Okay, so just put this forward again. You can see that price is very close to this low, and then we have this low over here too. So I'm expecting for both of these lows to get taken. Price is near this. If price is going to take this, it's most likely going to take this as well. And what you want to look for now, or what you want to expect or react to, is if price reverses something like this, and then for it to take out these lows. So if I just go to the 5-minute time frame, because there you will get more information on price, especially because the 15-minute is not as clear. So if we just put this forward, okay, cool. So you can see we're even closer to this near low. We're even closer to this low. Now I want to draw your attention to something. So let's say I was expecting price to reverse and return into this fair value gap for me to then target this low and this low. Well, what can we do? Well, we have this order block, and in this, with this order block, we have this fair value gap aligned with it too. So order block plus fair value gap aligned, so that's in and of itself is very powerful. And I'm actually going to be entering off of the order block. Now you may be thinking, well, why not start this fair value gap? Because this fair value gap makes this order block high probability. Now you can see that this order block, the start of this order block, is still inside of this fair value gap. So I'm just going to be targeting that. And we overall do expect price to come into about above 50%. So anything below here, there's no point even entering when you can actually enter above 0.5, so the 50%. And here it actually aligns with our OTE, so the 0.62, and it aligns with that very nicely. And you're going to be thinking, well, where are you going to put your stop loss? So my stop loss originally would just be above this high, but I just want to cover it because that'll be very tight. So due to spreads and whatever, my stop loss will be there. And my take profit was actually, if I believe, it was about somewhere here. Now the reason why I didn't actually target this low is because you can get times where price does come to the low and does not take out the low, and if price reverses on me, then I may be taking out this trade because I may have gone break even on my position. So that's one thing to factor in. And yeah, let's just put this forward, and you can see that I've just targeted near this low, and it's just in between these two lows, so it makes sense. But targeting here is fine as well. It just depends how your system is built, how your plan, your daily trading system is. Now me, I don't always like picking the low of the low or the high of the high. I just like sticking just below it, just above it or just below it for a high. So if we just put this forward, we can see what price will do. So it tapped in, so we are now tapped in. So if I just pull this forward, then if I view price, we can see that we do actually sell off. Now you can see we actually did take that low, we smoked that low. And what price did is came to this fair value up, came to this order block to dig quite deep into the order block, but that doesn't matter because our stop loss is above there, and we can see that our take profit was hit. Now this is very powerful. However, you need to build a daily bias as well. You need to be thinking, okay, what's my overall daily bias? Does this setup align with my daily bias? Now, if it does, you take the trade. Now, I don't teach in depth on behind the scenes. That is, of course, just in my mentorship. And I did actually take this trade live, and the trade execution will be shown here. And yeah, I hope you enjoyed this video. I hope you actually did take something away from this. It was a clean 2.6R trade during London kill zone. And yeah, make sure to check the description below for my Instagram. Give that a follow. Join my public Telegram channel, which is also linked below. And of course, my mentorship is linked below if you do want to join that. Now, until next time, guys, take care.